Hey, welcome back everyone. Quick video on why I'm going to close my Morgan Stanley poor man's cover call trade that I got involved with way back in what looks to be September. We're going to go ahead and close this for a profit today, and I'm going to show you why we're going to do this primarily. Largely because we have had this phenomenal run. I write this covered call, this last covered call, when Morgan Stanley's trading at about 82x. And all I'm looking to do is to get 85 out of this because and as you can see, we get this rally to 91, which is fabulous. I've been telling anyone that would listen, Morgan Stanley trading in the 70s was a steal. Had I not had other positions on that were down, I would have loaded up on this. In fact, I did have a couple poor man cover call trades, little tiny ones that closed out profitable. But this was the big one where I invested some $31,000 back when it was trading at around 85. It had just touched 90, so for me, anywhere between 85 and 90, this is one we can just play on a sideways trade. So I went ahead and got involved. I bought that 55 strike, and that was the 97 Delta Leap, which is beautiful because we get that simulated stock ownership. Meaning, if the stock moves $1, this thing is literally moving 97 cents of that. And that's why we get such an explosive move here to the upside, and I can make almost 9% on this position. Now, the reason I'm closing this, because clearly this is deep in the money. This does not expire until the 29th. I wanted to get off a couple cover calls if I could before this expires January 2024. But sitting where I'm at right now, I'd rather take the risk off the board because the risk is the expiration date. I don't want to ultimately own the shares here. So I want to make sure I take advantage of this recent run in the stock. We will pay a little bit of time value back when we make the purchase back. Ultimately, we can close this out because our Leaps call option has absolutely rocketed past my cost of $31. But the reason I'm showing you this is a couple reasons. We have January 2024 as an expiration. We get to that date and I'm going to have to make a decision. We either win or lose on selling the Leaps call option outright, or I take ownership of the shares. And here's the deal. I bought the 55 strike, so I would have to pony up to this person $55 a share. We did 10 contracts. Although I like Morgan Stanley for a big trade like that, that would be some $91,000 in the account. So tied up with Morgan Stanley. So we're not going to do that. Let me break real quick from the video. The new Poor Man's Cover Call Tracker is out, and what I would like you to do is support me with a great cause. One of the things I've done over the years is I've given away all my spreadsheets, including the free Poor Man's Cover Call Tracker. That tracker is very basic. It has really no calculators outside of the initial trade setup. Over the years, I've realized you need other tools integrated into the tracker to really set us up for success when we use the Poor Man's Covered Call. So I've updated the tracker with all of the things integrated that help us get closer to success. What I would love you to do is support me in a great cause. I want to go ahead and give you access to the new Poor Man's Cover Call Tracker, but we're going to do this where we donate to a great cause. If you donate, I'll give you access, the new Poor Man's Cover Call Tracker. I'm going to donate once a month 2 things. I'm going to donate to the Pancreatic Cancer Action Network. I've had 3 people in my life pass away from pancreatic cancer, and there's no cure. So over the years, I've realized that what's the money worth if you don't feel like you're contributing? At least that's how I feel. What I want to do is contribute. I want to contribute to a cause where I feel like maybe I'm helping in just a little way. And this is the best way I know. So what I'm going to do is this. If you donate, I'm going to give you access to the new Poor Man's Cover Call Tracker. And what you're going to find is I'm going to include a tab in there that includes Poor Man Cover Call resources, and I'm going to integrate a lot of my Poor Man Cover Call trades into the tracker. And you'll see it in upcoming videos that I do and showing you the tracker. Now, I'm also going to give you one free month of the upgraded CTP membership. Yeah, that's right. You donate $9.95 today, you're going to get both the new Poor Man's Cover Call Tracker and you're going to be added to my upgraded CTP dashboard membership list for one free month. You're a full member. This is your chance to both get access to the new Poor Man's Covered Call Tracker with all the integrated tools that get us closer to a successful Poor Man's Covered Call trade and managing it. Plus, you're going to get 1 free month, no obligation, to my membership. In the description is the link to this page. What I'd love you to do is consider donating to a great cause so I can welcome you aboard. I want to say thank you in advance to all that will support me in this cause. Now let's get back to the video. What we will do is this. We're going to buy this back so I can alleviate the obligation, sell for a profit, and move on. Because remember, this is $31,000. And even if I write another near-term cover call, just in case the stock were to fall below 85, or quite frankly, I'd have to buy it back and add some $6,000 to this trade. There is no way we're doing that, because if Morgan Stanley reverses course after the new year, this little Santa rally we're getting, well, guess what? I'm bagging all of that buyback, and the Leaps call option will fall with the stock. We're not doing it. That is one of my golden rules. A lot of people say, why don't you roll it for another credit? Well, rolling it for another credit's great when you could still make money on your recent near-term covered call, meaning you got paid $5 and you buy it back for $2. You're still making profit. You can roll it. Here's the deal. When you're adding that much money to this trade, what happens is it looks good now because I write another covered call, picking another strike. Maybe I pick up another 1,000, 2,000. Stock has moved higher. The call options are moving higher. I could probably pick up a $2 bill for another 30-day trade before this expiration of my Leaps call option. But if Morgan were to fall, so does my Leaps. I've added all of that. What I'm going to tell you is this. Try to resist with your big buybacks and rolls, because with this rally, which is fabulous, I mean, come on, you could have got in at 72 and it's now almost up 20 a share. This is Morgan Stanley. It's not Coinbase or Tesla. That is a parabolic move for a stock like this. Look at that move from 82 to 91. Yeah, they're going to take some profits at some point. So I need to be cautious here. Now, my shares are clearly going to be taken away next week because the strike is 85 and it's now trading for 92. So let's talk about the buyback. And the buyback is quite simple. When we plug it into our buyback calculator, you could see when I started this trade, it was 82.26. It's now 91.80. I would have to pay $7.05 to get out of the trade. 85 is a strike. I got 62 cents. Here is the differential. 25 cents will come out of my 63 cents. So of the profit of the 63 cents, I'm going to give back $250. Now, if I can make that up with the Leaps call option move, which in this case we were able to, we're going to do this every time. Granted, I'd like that differential to be less than a nickel, but not when I could, one, have my shares taken away. And when my shares are taken away and they're going to deposit me the $85 a share, remember, I'm going to get slapped with that short sale. And of course, the short sale is going to go from 92x to 85. And I'm going to have to pay that outright. My Leaps call option needs to cover that. That's a 1-for-1. We understand that's a 1-for-1 short sale. And my Leaps call option is a 97% of. So I lose a little bit when I sell the Leaps call option to cover the short sale. So let's be in charge. Let's be in control. So we're going to give back 25 cents. We're going to buy this back and we're going to go ahead and move on. This will close the trade, ultimately giving back some $2,880 or 9% on the cover calls. We end up picking up $5,700 on the Leaps call option. Cash in hand will be $2,860 or 9.19% cash on cash. Now, before I leave you here, I get this question all the time. John, you buy back, you lose all your cover call premiums, you sell the Leaps call option, you make all this fat money. Well, why don't you just buy Leap call options and let them go higher and then just sell them and you're making $5,700? That's not the game we play. See, we play the game where we want to generate near-term cash flow. The idea that a Leaps call option ever gets higher than where I buy in at, that's irrelevant. I mean, it's beautiful when it rallies and it sucks when it falls. But the goal is simple. We generate near-term cash flow because this near-term cash flow right here paid the bills. Paid the bills, lived the good life. Now the trade has moved on. My last covered call is definitely in the money. We go ahead, We spend the money to get out of the trade, and luckily, the Leaps call option creates all of this near-term wealth. Okay, so for me, I'm going to go ahead and do that. I would rather be in control of this trade. We let this go to expiration. The market maker deals with it. I got to come in immediately and close the short sale because obviously if the stock continues to go higher, I'm losing money one for one. And hopefully my Leaps call option was something close to a 1-for-1. In this case, it's a 97. So I'd be losing money as the stock is going higher because of that 0.03%. I'm losing as the stock continues to go higher. That's why I'm closing this out. We end up making a profit. Hey, I'd love to take this until next year, but because it's blown past my strike price, we are absolutely going to pocket some $3,000 total here, and we move on. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.